So let's talk about SoFi. Can this stock reach $100 per share? It is currently trading at $16.30. The question is, can it go 6x from here to $100 per share, which means that it would have to leapfrog its current $18 billion market cap all the way to $120 billion of market valuation. I've made a video about a year and a half ago in June of 2023 when the share price was $8.50. And the title of the video was SoFi is going to change personal finance forever. It was posted on June 2023. The stock has since doubled. So 100% in 18 months, it's not bad. But now we're 18 months later, and we need to ask the question again, can it make the next step? Obviously, we know this story. If you've been following the stock, we have probably one of the best CEOs in the market managing this company. The demographic they're following is probably one of the coolest one because the next wave of people who are going to be making money in the next 15 years, the young people of today, which are going to be the 35, 45-year-olds in about 15 years, they're on SoFi. They're not on Fidelity. They're not on Ameritrade. SoFi speaks to that demographic, and it's going to pay off long term. And it's already happening. For the past 3 years, the membership of SoFi has tripled from 3 to about 10 million members. That is insane. Plus, they have the bank charter, which they got. So Anthony Noto, which took over pretty much a broken company, is making all the right moves into taking SoFi from a student loan business, which was half broken, from a one-trick pony to a one-stop shop financial solution that everybody's going to use for the personal finance, whether it be banking, loans, or brokerage, you name it. So let's take a look at the stock here on Stock MVP, right? So the fundamentals of the stock are quite impressive, right? We have 31% revenue growth, which is very, very good. But even more impressive, we have almost 200% revenue growth of the past 3 years. That means that the company went from $870 million of revenue just 3 years ago to $2.6 billion over the past year. That is very, very impressive. Now, if you look at the operating expenses right here, well, the operating expenses, they could be better. They're not a cheaply run business. If you're running a business that generates $2.6 billion in sales and your operating expenses are $2 billion, that is not a cheap business. So they're not very, very cheap. However, if you take a look at the growth of operating expenses compared to the revenue growth, well, SoFi just gave you 31% of revenue growth with only increasing operating expenses by 12.6%, which means that they're a scalable business. They grew 200% of revenue over the past 3 years with only 60% increase in operating expenses, which means this is scalable. As SoFi continues to grow, this gap between the OPEX and the revenue is going to increase. That's good, right? Now, it is very efficient. If you look at the operating income right here, the operating income is up 350%. The EBITDA is up 1,200%. And if you look at the cash, well, their cash position over the past year grew by 15%, while they got rid of 50% of their debt. Very, very, very smart. They actually now have more cash than debt for the first time, and that is really impressive, really impressive. And of course, you have to look at the forward PE, currently 55. Now, a 55 forward PE is not cheap by any stretch of the imagination. It is not cheap, but it is not out of the realm of possibility. It's not an outrageous PE like 300 or 200. It's definitely within the norm, right? And you can see that they are getting better. 81 current PE, 55 forward PE, and by the next year we're going to be making this video, it's probably going to be forward PE of 35. The one hitch this stock has, if you look at this section right here, they have 13.2% offshore interest, which is quite high. And that short interest essentially is pulling down the share price of the company almost artificially. Once the shorts are essentially giving up on this company and moving on to the next prey, the stock price will be much better as far as performance. But a high short interest will always keep your share price down artificially. It's something to be aware of. And if we move to the valuation section of here and we look at the DCF calculator, so the one thing I like to do with these companies is plug in the revenue growth. to see that current share price being reflected. That means we're going to plug in 22% at 10% discount rate to give us the 16% current share price of the company. So what we just did here is a reverse DCF. We reverse engineered this DCF to find out that we need 22% of growth in order to reach the current share price, which is lower than the current 31% revenue growth and a lot lower than the actual EBITDA growth rate, which is currently 1,200%. But let's just keep it in the realm of revenue. So the company is being traded based on the reverse DCF, which is 10% lower than the current revenue growth, right? If you change this to 31, which is the current percentage of revenue growth of the company, you'll see that the share price is about $23. That means that based on normal DCF metrics, SoFi should be trading at $23 per share. That's a 40% upside for this company today. Now, if you go ahead and you do the 5-year price target for SoFi, and let's say we do 25 to 40% growth, and we do at 10% discount, and we'll find out what the 5-year price targets are. So based on these numbers, the next leg for SoFi is the conservative case would be 26.8. That's a 65% in 5 years. Not amazing, but not too bad. The 5-year middle ground is 37.5, which is 130% in 5 years. And the optimistic, the bull case for SoFi, the next leg, the next 5 years, is a $50 price tag, which is a 200% increase from the current share price. So realistically speaking, I don't think SoFi would hit $100 per share in the next 5 years. Of course, it may, but I still think that at $50 per share, which is definitely reasonable for this stock price, reasonable with this company setup, at $50 per share, which I think it's headed to, people are going to make 200% in 5 years, which is terrific. I know it's kind of hard to think about it when you just had 2 years of extravaganza in the stock market, but in a normal stock market, if you get 200% on the stock within 5 years, it's a really good return. Of course, this is a conservative model, so SoFi might surprise for the better, and that's good. But I think SoFi is currently a $23 stock today and a $48 stock on the bull case in 5 years, which is terrific, which means I'm bullish on the stock, just like I was a year and a half ago before the stock did 100%. Now, as always, a few things. If you'd like to get your own copy of Stock MVP and do these things for yourself, go to stock-mvp.com. You can get it. You can try it out for free for a week. And of course, if you haven't yet, check out the Academy, patreon.com/TomNash. We'll teach you how to do DCFs, reverse DCF, valuation techniques, all that good stuff. We'll see you there. Later.